Mid-cap space are buzzing. We have the Reliance Group stocks, the Anil Ambani Group stocks. They're buzzing on the back of the Supreme Court verdict that came in. Reliance Naval and Engineering, which is the defense arm, up around 16% as we speak. And then we have Max Ventures too, which is moving higher and with a fair amount of volumes. In fact, Max Ventures is higher by about 12% now. Max Group stocks have been in focus. Max India on account of the impending sale of their insurance business, as well as Max Financial, where New York Life Insurance bought about 2% stake in the company. So Max Ventures, their market cap around close to around 800 crores, and the stake that they hold in Max Financial as well as Max India is around 500 crores. So some impact seen on the group company stocks as well. But another stock that is on our radar is Lupin, as the US FDA has issued 18 observations to the company's Mandideep facility and 10 observations to the API unit. Ekta joins in with all the details. Ekta.
Well, in fact, it is negative news which has definitely come in for Lupin, because the details of those 22 observations have now become public. As per the US FDA, the Form 483 which came through, it in fact indicated that there are around 18 observations which were issued to the Mandideep facility, 10 observations which were issued to the API unit, and 8 observations to the finished product unit. There were 4 total US FDA inspectors who inspected the plant, and it was inspected all the way from 26 November to 4th December. Majority of these observations have come in for the API unit, around 10 of them. Majority of the observations given to the Mandideep unit basically are around hygiene issues, around cleaning, etc. So the view I've got with regards to this is that it's divided. There are some people who are saying that, the observations seem as though they can be resolved, whereas the other camp is saying that these observations look tough. Now, while this might not be a material contribution in terms of the numbers for Lupin, what it does highlight is that if in case this plant also creates a problem for them, if it gets escalated to a warning letter or an import alert, etc., then there's a possibility that Lupin would be perceived to have system-wide issues in the company, because they already have 2 plants under warning letter, Goa as well as Pithampur 2, and this would mean that there would be a 3rd plant which would come under the US FDA scanner.
All right, so that was all about Lupin. Thanks, Ekta, for getting us all those details. Now, telecom stocks, the beleaguered sector in a way, those stocks are buzzing in trade today as the TDSAT has dismissed the TRAI's predatory pricing rule and has ordered the telecom regulator to rework the predatory pricing rule within the next 6 months. Reema Tendulkar joins us with all the details on what it means for the companies which are buzzing in trade. Reema.
Yes, big relief for the telecom names, particularly Bharti as well as Vodafone Idea, as the TDSAT has dismissed TRAI's predatory pricing rule, and they've ordered the TRAI to rework the pricing mechanism in the next 6 months. So what exactly was TRAI's predatory pricing rule? For one, they gave a definition of a significant market player, which meant anyone who had a subscriber or a revenue market share in excess of 30%, which in the current environment would mean a Vodafone Idea as well as Bharti. Jio would not yet come as a significant market player because their market share had not crossed that 30% mark. So TRAI orders said that anyone who is a significant market player cannot engage in predatory pricing. All their tariffs have to be uniform. They cannot offer customized discounts in order to attract subscribers. Their tariffs have to be made public. They have to be reported to the regulator. Now, the incumbent players, litigated against this, and now the TDSAT ruling has come in their favor. In fact, TDSAT has rejected TRAI's definition of a significant market player, which means now a Vodafone Idea as well as Bharti can continue to offer customized discounts to retain subscribers. They're not bound to report their tariffs to the regulators or make them public. So a big relief indeed for these players.
All right, relief for the telecom players, but in a negative turn of events, the Supreme Court has put the sale of Fortis Healthcare on hold. Ashmit Kumar is here with what transpired at the Apex Court with regards to this. Ashmit.
Well, the long-drawn battle between the Japanese drug maker Daiichi on one hand and the Singh brothers on the other appears to have claimed another fresh casualty, this time in the form of the Fortis IHH deal. Now, keep in mind that Daiichi had moved a contempt application before the Apex Court against the Singh brothers. Their cause of concern was that there was a standing Supreme Court order which clearly said that the Singh brothers cannot create fresh encumbrances on unencumbered shares of Fortis Healthcare. That was the standing order. The cause of concern for Daiichi essentially is they've argued that despite that standing order, the Singh brothers have gone ahead. Their unencumbered shares of Fortis Healthcare, well, they've created fresh encumbrances on at least 23 lakh shares as per Daiichi's information. Now that is the cause of concern. Now prima facie the apex court appeared to be in agreement with Daiichi, and on the back of that it has issued two key important orders. One of course is the notice that has been issued to the Singh brothers, India Bulls and Fortis Healthcare, but more importantly the apex court has issued a status quo order with respect to the Fortis IHH deal. So at the stage where the transaction currently rests, it will continue to do so with absolutely no forward movement, and this of course calls into question the open offer that was to begin later this month, and that would of course directly have an impact on the minority shareholders. But for now, the key takeaway here is that the apex court has made its position abundantly clear. It has granted interim protection to Daiichi in the form of a stay as far as the Fortis IHH deal is concerned. We of course expect Fortis counsels to come back and to argue before the apex court that Singh brothers have little or no connection with the company in question, that they're not on the board, their nominees are not on the board, they have a very minuscule shareholding, but of course that's for a later date. But for now, the Fortis IHH deal, status quo being put on that by the apex court. Back to you.
Oh yes, Schmidt. So that's a very big development, and the stock itself is showing the impact. But we really have to see the legal angles here. The remedial measure was taken by the Fortis promoters even before the deal was struck. So they had really disentangled themselves from there. And on the other hand, IHH already is in control and has pumped in 4,000 odd crore rupees, which is a huge FDI for the country as well. So what really happens going forward to the open offer, which is to be launched on 18th of December, is a very big question, and that's why the stock is showing fair amount of pressure and uncertainty as well.